Good evening. Ethereum is trading around 1870, and there is a very specific plan on our desk tonight. One level we want price to reach down and grab, one zone we would actually want to buy into, and two targets above it. We are going to keep this simple. Every term gets explained the moment it comes up, every number is on the chart, and the level that would make this plan wrong gets said out loud at the end. Analysis, not advice. This is Ethereum on the daily chart. Each candle is 1 day of trading. Green means it closed higher than it opened, red means lower. Read the shape and the story is obvious. Price fell hard, found a floor down here, and has been grinding back up since. The recovery is real, but it has carried price straight into the level that decides what happens next. That level is the pink line at 1804. We call it the sweep level, and it is the single most useful idea in this whole video. Here is what a liquidity sweep actually means, in plain English. Under any obvious level sits a pile of stop-loss orders, automatic sell orders from people who bought higher. Big players need those orders to fill their own buys. So price very often dips just under the obvious level, triggers that pile, and then turns straight back up. Which flips how you should feel about a dip to that line. It is not the plan breaking. In this read, it is the plan working. The green band underneath is where that dip becomes interesting. 1720 to 1800, the long zone. Why a zone instead of one exact price? Because nobody catches exact bottoms, and pretending otherwise is how people miss the whole move waiting for a number that never prints. A zone gives price room to be messy while the idea stays intact. So the posture is patience. You do not chase price up here. You let it come to you, and you only care if it actually gets there. If that zone holds, the first target is 2000. That is the cyan line, and it is not a random round number, it is where price stalled on the way down, which makes it the first place sellers are likely to show up again. Above it sits the second band, 2100 to 2200. But this one comes with a condition attached, and the condition matters more than the number. Ethereum rarely runs on its own. That upper band is realistic if Bitcoin gets to the 70 to 72,000 area, because when Bitcoin trends, money rotates down the risk curve into Ethereum. No Bitcoin move, no upper band. That is the honest version. Every plan needs a line where you admit it failed, so here is ours. If Ethereum loses 1720 on a daily close, the zone did not hold. The sweep idea is done, the targets above come off the table, and the correct move is to stand aside rather than argue with the chart. To recap. Sweep at 1804. Zone from 1720 to 1800. First target 2000, then 21 to 2200 if Bitcoin plays along. Invalidation is a daily close under 1720. None of this is financial advice, do your own research, and I will see you in the next one.